Alrighty, traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I hope everybody's having a great trading session. And it's actually been kind of slow, a little choppy right now. And so just kind of waiting on the open, really. The thing I got to point out is, I'm going to reiterate what I said on the Face webinar, is that I'm a little concerned that stocks are going to turn lower. And if that's the case, what's the dollar going to do from here? Like right now, I think a lot of people are looking at the euro thinking, oh, look at that, round number. Here, let's just grab that, round number, false breakdown, right? So it's going to bounce. And I mean, it makes sense, but we got to watch stocks, because if stocks start to come down from here, then that means the euro is probably heading back through these lows. I think a lot of people are getting long down here. And I think a lot of people that were short for the last couple of days are also covering up. So that's how I feel, which means that this euro 120 is important support today. That's what I think it is. If we break through that, we should see 1950 again, and maybe even a little bit lower. I mean, just depends on what stocks do. For right now, though, I would think that any rally back to 121 is going to find sellers if we can make it back there. Actually, I'd be pretty happy to sell up there if we got up there, but I'm just going to say 121. You guys have to excuse me a little bit. Last night I was. I had a bit of a spill, and I was going through a field to get a soccer ball for another team, and the ground was kind of the ground was not solid, and so yeah, man, I'm in kind of rough shape this morning physically. Excuse me. All right. Anyway, let's talk about the cable. And if I sound a little squirmy, that's the reason why. My hands are all jacked up too, they're all scraped up. But anyway, things you do at night in construction areas, getting soccer balls. That's what happens. All right. So the cable's trading heavy, kind of like the euro. I know they're bouncing right now. I get it, but I'm just saying that overall, they're trading kind of heavy. The pound just hit new lows, and look at relative strength. The 4-hour chart. Just take a look here. We hit a new low in price. We also hit a new low in relative strength. So what that does mean is that it's not bullish. It doesn't mean that we can't bounce. So from current levels, resistance should be at the 38% retracement. You can see that high right there. See that high? So that should take us to 140.10. So I'm just going to, I'll write 140.10. Okay. Support. I think we can actually take out these lows. I do. I think the 618 is going to be important, and that's going to come in right here at 138.25. Notice how everything's on range right now. Aussie. We got a flag pattern. Resistance should be the 38% retracement at 78.15. Also that high right up there too. So let's write that down. Actually, we'll just write down 78.20. Support. If this is a flag, if that's a flag, that means this support right here at 77.40 is important. But just realize that below that is 77 cents, and that's really important. That's like key, right? Because that's the trend line. That's this trend line. We break through 77 cents, and we're going to turn bearish. So this is an example. The Kiwi, actually, we hit new price low, and relative strength was divergent. But the Kiwi is trading relatively heavy. I know we could, I guess if we take out this 72.90, so I guess 73 cents. That'd be good, but like 72.10 to 73 cents. You know, and then this is really, really important, obviously, because if we break through, you know, this low, that would confirm that we're taking out this uptrend line. So then we have to turn bearish below that. But I still think this is possible. You know, it is. Obviously, if stocks are going to go higher, I mean, the place you probably want to be in is the Kiwi, just to make a move back up towards 73.65, right? Dollar Canadian. So dollar Canadian, it's actually holding up pretty well considering. I know we're lower this morning and we're at lows. I think there's some risk that we can still come down and develop this inverted head and shoulder pattern. So today support probably around the 126 level. Resistance. We're going to mark up the 127, then 127.50. Yeah, I guess that is 50. All right. Dollar Swiss. Pretty bullish here. But we are at really key resistance. You guys know that. This is really, really critical. I mean, you can see spike low, spike. Look, I don't think it's a good idea to short the Swissy right now, but if you are like, you know, itching to do something and you're like, oh, you know, I want to, you know, take a trade and just can't help myself. I mean, you know, short the Swissy, put your stops above 92 cents. I mean, you're only risking 15 pips. I'm not going to do it, but I'm just saying that it is really key resistance, right? So, but I'll have to say this is one of the only two dollar pairs that are actually bullish right now, that and the dollar yen. Remember, we are above this broken trend line. So ever since we broke above that trend line, it's been straight up since then. Now we're above the 200-day moving average. So you have to imagine that dips are going to be fairly shallow here. I could write down support as 91 cents, but you know, the 200-day moving average comes in 91, let's just say roughly 91.40. So the 200-day moving average is coming in right around here. So I would say that this 91.40 level is going to be support before 91 cents. Okay. US dollar, Norwegian krona, 50% retracement, right around the 50% retracement. Let's further support. It's going to be 844. You know, this dollar Norwegian krona, we're above the downtrend line, obviously. We really have to break above this 870 level to turn bullish. We tried this 865 and we just knocked our head up against it. It's actually 873. So 845, I think, is going to be really key support. Let's see if we can get it down there today. Okay. And maybe we are doing something like this. But from here, I mean, resistance is going to be at least 862. I mean, so 862, 873 is going to be key. And we got to just kind of keep it in range for now. This was a chart of the day yesterday. That's going to be a big bullish breakout. We break above 850. US dollar, Mexican peso. So Salma's come down a little bit, but she's still holding up pretty well. We're at a 38% retracement and breakout point from this low. So you can see, and let me grab this. You can see right over here, and we're going to keep that. This is a 50% retracement, another spike high here. So even though we're at support right now, let's imagine, because, right at the open here, they're going to try to jam stocks up. Obviously, they are. You can see the Dow's moving higher, S&P's moving higher, NASDAQ's moving higher. They're jamming the stock market up in the morning. So if that continues, maybe we drop back to 2047 right here, the 50% retracement. Now, I know I've been very, very adamant about watching this 2085 level. I mean, given the fact that we kind of broke above that, consolidated, couldn't capitalize on it. The reason why is because stocks are holding up. So if stocks were not holding up, this would be a different story, but they are. So we can't deny that. So that means that this 21 level is important right now. This high is now more important than this 2085 level. So 2105, that is now critical. That has to be taken out for us to turn bullish. I mean, and stocks need to roll over because they're just not. Dollar yen holding up really well. All dips down to 106.25 should be very well supported. Resistance is at the 618, by the way, just so you guys know where it's at. Okay. That is the 618 of this last move. Okay. High to low. Obviously we can go from here to here too. But the first 618 is right here. This is going to be resistance at 107, roughly 107.15, and you can see it coincides with these horizontal lines. So horizontal top, excuse me. So 107, basically 15. Any dip down to 106.25 should allow us to find some buyers. And while yields are going higher and while stocks are going higher, these two are going to remain bullish. If yields ever reverse, so if we start to see yields reverse from, this previous support acts as current resistance, and we start to dip lower, I think the yen and the Swiss will trade accordingly. Okay. All right. Hold on really quick. Stocks are opening here in just 1 minute. Man, they are just jamming it up. Jamming it up. Okay. Where are we at? Dollar index. So the dollar index, I mean, I know we were talking about on the face webinar. I mean, if the dollar index wants to play out of this, this triangle, I mean, we can make a move all the way up to 92.50 and higher. I'm not saying that we're going to. I'm just saying that this has given us a little bit of a lift, which might play into, the 91.70 level that is really key. The 78% retracement is kind of holding right now. Let's imagine dips back to 90.60 should be well supported today. Resistance 91.70, and this is key resistance, just in case we make our way up there. I'm not saying we are or will. I'm just saying, you know, it's possible, especially moving out of this triangle, right? I'm going to move that over. Okay, S&P. So we're, you know, strong open. Key resistance is going to be this high right here, this hourly high, 39.15. It's going to coincide with this trend line. Pretty darn close, right? So actually the 88% retracement is 39.21. So that's the number that I think we should watch. 39.21. Support intraday is going to be today's low is 38.70. All right. Let's take a look at gold, and then we'll look at silver and Bitcoin. So here's gold. So gold, you know, as I told you guys yesterday, that rejection at the 1760 level, pretty important. The good news is if you're bullish gold, you just hit the 127% extension and bounce from there. So that makes that important. So this is, I think, your, you know, range for, ooh, shoot, I didn't want to do that. This is your range for that's important for today. So 1760, support at 1710 roughly, right? So support 1710, 1760, and I'm going to put an asterisk there. While we're below 1760, it's bearish. Other issue is silver is trading a little, oh, like look how we respected this 26 level. We dipped right to the pretty much the previous low at 25.88. So I'm going to write down 25.90. Really important. We're range bound here. You know, I could see us maybe moving back to 27.25 today. It's possible. We're in a range. Bitcoin, you know, I guess I should just write what I've been writing, 52 to 42, right? I mean, that's it. Nothing's changed. 42,000 to 52,000. And that's it. Because you guys know that, and it is still bullish, by the way. We have to be bullish while we're above this 42,000 level. So the 42,000 level is that, you know, this breakout point right here, right? 52,000 is the underside of this trend line, and these recent highs, we keep failing from there. So you're basically stuck in more of a bullish trend. While you're there. And, you know, we get below 42,000, things change. Okay. So the market just opened, and let's also keep an eye on volatility. Volatility has been stubbornly high. I know a lot of traders have been laying into it, just trying to sell volatility, you know, because they expect stocks to continue to go up. So they just want to press on volatility, but they're not getting paid. So, you know, we get these little sell-offs and you can see volatility spikes and squeezes everybody out. This is what happened on Thursday, Friday. So watch volatility, you know, especially, you know, I'm just going to say this, especially if the S&P breaks below, you know, 3,800, this green, well, definitely below the 618, but which comes in at 37.77. But I would say if we start breaking through these support levels over the course of the next couple of days, if that happens, you got to be a buyer of volatility. Okay. Dollar Mexican peso is holding up pretty well. Watch the dollar Mexican peso if we break the overnight highs right there. If we start trading 2080, be careful. Okay. Steve or Stelios, are you guys here this morning? I don't think they're here. Okay. Do you guys at home, do you have anything that you'd like me to take a look at before I sign off here? And I'm going to, if you guys missed it, Stelios, his daughter, dropped their MacBook. Man, that sucks. I mean, you know, his youngest daughter, she's what, 5, 6, you know, and they're homeschooling, and you know, you can just imagine little girl carrying, you know, the laptop she's trying to do, you know, work on, and then breaks it. So I think he had to go run. He had to go run to take it to a repair place just to see, because it powers up. They're just, the screen is not powering up. So anyway, that's happening, and I think Steve is probably resting after jumping on the Face webinar this morning. So anything else that you guys want to look at today? Oh, one other thing. So, you know, let's keep an eye on like the ZAR. Ruble sold off pretty aggressively this morning, but it looks like we're stabilizing, right? Lira doesn't do much. Let me see, USD, PLN. Let's take a look at the zloty. You know, these are some of those exotic currencies just to keep an eye on, especially if the dollar Mexican peso starts to get above 2080. You know, you want to confirm that some of these exotic currencies are moving in tandem. Hugo asked for the guppy. Yeah, let's take a look at the guppy. I'm not really too excited about this at current levels because we've made such. That's you know what, Hugo, I'm glad that you brought this up, actually. So, and not because of the guppy. The guppy, we're at the 161% extension, possible false breakout. To play it as a false breakout right now, and let me move this. To play it as a false breakout, you want to break these lows, that spike low from Thursday. So if we break 147.40, which is only 130 pips away, we break that level of support, I think you want to be short the pound yen. Okay. All right. That's what I'm going to be looking at today, like a break below, or not today, like over the next couple of days. I want you guys to keep an eye on the Canadian yen too. This is another false breakout late last week, reversed. We're bouncing because of risk. I think this is, and I might actually sell some today, just letting you guys know in advance. I might sell some today because I think the risk is above. Shoot, I might actually trade it. I might actually short it right now. I might even put in a pattern in play because look, this is a 618 retracement. Oh shoot, I'm going to do it. Sorry guys. I'm going to sell some. Just give me, I want to put in this pattern in play because I think the risk reward. So new pattern in play. Hold on. I'm only going to go half size because this is just, it's you know, it's counter trend obviously, but the risk is very, very well defined. So you're at the 618 retracement, you have horizontal resistance, you have the spike high from up here. Okay. So that means your stop has to be above these highs. So the stop's got to be, you know, let's just say 85, like you can do it over this 85.58 if you want. I'm not gonna put mine that wide. I'm gonna keep mine above the 85.30 level. Okay. Your entry should be somewhere around here. So 84.40 to 84.65. 84.40 to 84.65 roughly. And what I would look for a target is back down towards these levels, like this breakout point here or this high right here. So that's, I'm going to say roughly 82. That we can adjust if it starts moving lower. And so that is going to be confluence of resistance. And you guys just got a new pattern in play. I'm gonna get into it. I'm gonna get into that here this morning after I come off the webinar with you. All right. Tony says, my man, thank you for the CJ. You're welcome. The IDA asked the US dollar Turkish lira, please. Yeah, I'll take a quick look at it. Here you go. Well, this is where you turn bullish. This is pretty easy, actually. This is insta bullish level. But while you're below it, it's hard to.
Was that how do they call it? A word game?
What? Insta bullish?
Yeah, because
insta bullish is like, it's kind of like insta soup.
No. I know, but Istanbul is the capital of actually it's not the capital. It's like the
that was funny. I didn't catch that at first. So that's funny. I didn't know you were going to be here, Steve. I was actually just I was wrapping things up, but I'll let you take over here in a moment. But let me say that previous support, current resistance, 38% retracement. It's Istanbul. It's insta bullish above this 70 or 7.55 level. Then you want to be bullish that. All right, I'm gonna actually go short some Canadian yen. There's your bias chart. If you guys didn't get it, I'm gonna upload it. And Lorraine said, Blake, you sound relaxed lately. That's good. I am way more relaxed. It's a big difference when you're not, making and losing like 15 grand every 12 hours. And it's just definitely different. I feel different. It feels better. Anyway, thank you, Lorraine. Steve, did you want to show the folks anything? Because I'm gonna roll out. I gotta go let the dogs out.
Who let the dogs out?
All right, buddy. Hey guys,
just give me like 30 seconds finishing up something for ForexAnalytix, and I'm ready to take over. Okay, let me share my screen. Perfect. So let's start with.
Oh, Steve, sorry, I was going to say I was talking and I had myself on mute. I just want to say welcome back, Steve. Good to have you back.
Thank you, mate. It's good to be back alive.
Yeah, no kidding. All right. See you guys. Have a good one.
Bye-bye, mate. Okay, so let me open the question box, guys and gals, and have a look what you want me, when to buy platinum, where to put the stop. Now, I can't do that for you. Give me a second. Perfect. Sorry, but I had to finish up something. So we can have a look at platinum. As I said, I can't tell you where to buy and where to sell. I can tell you what are the interesting zones. And definitely 1170 is one of them, which we've been testing during the past 3 days, right? The lows of the day were there. Yesterday's lows of the day were there. The day before yesterday, so on Friday, the lows were there, which proves that this 1170 is indeed a level of interest. Now, the fact that we've been finding support here is positive for the bullish case. What is not positive is that we haven't had a real strong reaction to the upside yet. So if this persists, I think the signal it's going to send us is that we're not done correcting lower yet. So, if this level is to hold, it needs to produce some kind of a reaction I think very, very soon. When would I be more certain that we're done? As always, since we're talking about a possible bull flag here, breaking through the flag, right? So in this case, that resistance area is at around like 1240. Now, there are two ways to trade a corrective move. One is to scale in on the way down or on the way up if we're talking about a downtrend. So the corrective move is to the upside, right? In which case you're jumping the gun a little bit and you're risking, and sometimes it happens, right? That what looks like a corrective move is the beginning of something different. Now, statistically speaking, that's not the case, but that is not to be excluded. So one possibility is this, scaling in on the way down, in which case 1170 would be one of the levels that would definitely produce a nice entry point. The alternative is to play out the breakout, to say that, okay, this might be a low. How do we know if we break through resistance? So the other way is to get yourself a worse of a buying price, but a higher level of confirmation to go along with it. So, in trading, these two are always a trade-off, right? You trade more certainty with worse entry level, or vice versa. So it's totally up to you and up to your personal preference, leverage, so on and so forth. So you know how to handle it, mate. Now, on the basic question, if I think that the path of least resistance still remains to the upside, the answer is yes. I think that the path of least resistance still remains to the upside, and specifically, I think that platinum, that has been one of the most battered down metals in the not so recent actually past, is probably one that's going to have a spectacular recovery in the long term as well. So I'm long-term bullish. Now, platinum still in a long-term consolidation, nothing to mention here. Copper had a nice pullback, but has it been destroyed or invalidated like the uptrend? In no way whatsoever. Nickel, somebody can call this a false break higher though, right? Watch out for this horizontal support resistance area. We are back testing it as support, and for the time being, at least today's candlestick seems to be a rather interesting one. So it seems to be working for now. So this, what is it, 1340, let's say. I think it's a level of interest, although the false break higher might indicate that something more might be coming to the downside, a deeper corrective move. My pleasure. Can you look at GDX miner? Yeah, absolutely. And something, I was looking at that the other day at night when I was in the hospital with a friend of mine, who was for 13 and a half years a market maker in Netherlands. He recently quit his job. He had enough of it after 13 and a half years, day in, day out. He made quite nice money, and now he's trading for himself and giving himself some time to relax. So he has a good portfolio, and he was looking for things to add to it. So one of the things I mentioned to him is that, listen, I told him, Dimitri, in my opinion, Dimitri is obviously his name, I told him, in my opinion, GDX is very, very interesting. Also, GDXJ, for those that don't know, it's the gold miners, junior gold miners ETF. For two reasons. Reason number one, you can clearly see, if you zoom out, that we've had a hell of a rounded bottom, right? Just look at this formation. I mean, it's a beautiful long-term rounded bottom. Now, the second reason is that clearly what we've been having is a corrective move, which, if I remember right, even preceded a little bit the correction in gold. How do we know that it's most likely a corrective move? Compare the momentum to the upside with the momentum to the downside. As you'll see clearly here, we've like retraced 50% of the move higher, having spent more time than it took us for 100% of the move higher. So momentum is clearly totally different, right? Overlapping, choppy price action. Also pay attention to this horizontal support resistance area, how important it is, right? Even going back. So I think that the ZDX is at a very interesting juncture. Now, I'm not saying this is a complex correction, right? So I'm not saying that we have found a low. It's not easy to make a call like this. What I'm saying is that I think that the risk reward has definitely started looking very appealing to me. And if you also look at the GDXJ, which, as I mentioned before, is the miners, you'll see that the corrective move lower is similar in structure. A different type of correction longer term. We didn't have a rounded bottom here. We have something different. But bottom line, it remains the same. We had, in my opinion, an impulsive move higher. We've had a corrective move lower, which has not even retraced 50%, so it has retraced even less. We have momentum divergences. Now, exactly as I mentioned before with the example of, what was it, platinum we were looking at. There are two ways you can trade this. One is scaling on the way down. The other one is wait for a breakout from this formation and buy at a little bit of a worse level, but with a much higher conviction. So, I think that this is a beautiful potential trade for the following reasons. It looks great from a technical perspective. It is an amazing trade from a fundamental perspective as well. As I've said multiple times, I see no way how the macro can play out that precious metals and anything that has intrinsic value doesn't explode higher. So I love it. I think that silver miners, gold miners, gold, silver, platinum, I think all those are eventually going much, much higher. And by looking at these charts, I think the eventual is not far away. Technically speaking, I think that these corrections are already very, very mature. As I said, it's extremely hard to call the low unless you see some kind of a massive candlestick, like engulfing like several of the previous days, accompanied by some kind of a fundamental event or like big announcement or whatever, in which case you can more easily say, oh, but that was probably like the low we saw yesterday, just giving a random example. But I do think that these corrections are very, very mature and much, much closer to their end than to their beginning. So I think it's a matter of time, weeks most likely, not more than a few weeks most likely, before these start moving to the upside once again. And I do think that once they start moving to the upside once again, they have a high likelihood to actually accelerate to the upside and explode higher. So, definitely positions I would like to scale in. Now, there is a distinction I want to underline here, and I've mentioned it before. I just want to make sure that it's clear and understood. There is a difference between buying gold or silver or platinum and buying the miners, right? because in essence, buying the miners is more speculative. It's, somebody would say, the same type of trade but on steroids. Plus, you take the company risk as well, because there is always a chance that gold might end up doing well, but there is always a chance that for esoteric reasons, some company might come out and declare bankruptcy, or some kind of scandal coming out. Not things that happen often, obviously, and have, like, let's say, you go and pick a specific silver mining company, and silver might be doing good, and they might do horribly because something happened that was specific to this company. So it's more of a speculative bet. So you want to take it the safe side. You want to just, like, protect your purchasing power. Then you buy the metal itself. You want to add a little bit more leverage to this type of trade, then you can build yourself a little portfolio of some of the miners. Now, how you construct that portfolio is totally up to you. You might want it to be a little bit more speculative, in which case you choose more of the junior miners, which have potentially more upside, but also potentially more downside, right? So it's like a more high beta type of trade. Now, alternatively, you want to take it, the safer route. You choose like the 2-3 biggest companies, and you spread evenly among them. So you at least that you've invested in some of the big names in the mining industry, which have like a very, very, very low probability of something going horribly wrong with the company itself. I'm not an investor advisor. I mean, this is not my job here, as you know. Now, on a friendly basis, I can discuss these things with my friends. I'm giving you a general guidance, and I'm showing you specific charts, and giving you my input both from a fundamental and from a technical perspective. That's what I can do here. Yes, there is, mate. There is. I think there is. I've never traded it. I've never bought myself silver miners. Might be SLJ. I'm not sure. To be honest. I like to take it. No, I don't think this is it. I'm gonna look for it and let you know tomorrow. Okay. But there is, yeah, there are gold, there are silver miners, and there are also silver junior miners. Yes, absolutely. And you can choose to have some exposure in those as well. As I said, it's more speculative, right? So you take all that into account and decide how you want to play it. Any thoughts on AussieCAD? Actually, you're very lucky, because it's not AussieCAD and KiwiCAD are not trades that are not markets that I'm looking like on a daily basis, like every single day. But today happened to be like I'm having a look at them like a couple of times per week on average, I would say. But today it was one of the days that I did have a look at them, both of them. So having to do first of all with the AussieCAD, we had the breakout from this pennant. It was actually it was more of a megaphone formation, but in any case, clearly a corrective formation. I mean, it's more than obvious here, right? Then we hit a wall when we actually tested the 161.8% extension of this corrective move lower. Quite a couple of strong days lower, you'll see that more or less it coincided with risk off. And as you'll see, there is some correlation, because the Australian dollar is clearly playing better with risk on than the Canadian dollar, right? That's why you'll see the resemblance, some decent correlation. Although they're both considered commodity currencies, you'll see that it's rather decently correlated with, let's say, the S&P, right? And as you'll see, we found a low when we backtested this broken trend line resistance and support. Now, admittedly, these 2 days lower, had a very, very, very strong momentum. So, yeah, from a technical perspective, you can be long against the lows, right? I mean, these lows here. But I'm not sure that this move, these 2 days lower, can go without seeing some follow through. So I don't know. My intuition tells me that there is a chance that, there is more to it before we can continue higher. That's what I think. Not a trade I would take though. I mean, when I don't have like strong conviction in something, the easiest decision for me to make is say, okay, next. You know what I mean? Let's look at something different. Now, in the case of the Kiwi against the Canadian, now this adds a little bit more credibility to the bearish case for the Aussie CAD, because this had a different type of formation, a triangle. The triangle satisfied its minimum requirement, which was to produce a higher high, as it did. And now we broke down within the symmetrical triangle, which is not a good indication, for the bulls. Now, what is the next milestone here is to produce a lower low, in essence, to go lower than this low. So bottom line, we end up breaking down from this triangle. I think that's a bad omen for the longs. I think we're headed lower. So that's what I think about these two markets. Euro Kiwi, yeah, absolutely. So as I said before in like the first part of phase, listen, Euro Kiwi had as expected, a very strong reaction higher once we got some risk off, but it needs more of it to continue higher. Now, admittedly, the past 2 days have been inside days to Friday. So that tells me that there is a good likelihood that we have at least one more leg to the upside. On the other hand, there is also this trend line resistance I'm looking at, right? Although it's not like super important. Why? Because it just passes from 2 points. It would be more important if it passed from more points than 2. So, I'm looking at it, but, not paying so much attention to it because I'm still uncertain about how important it is. I would say there is a good likelihood that there is at least one more leg missing to the upside here. So I think given the reaction higher that we had and the prolonged move lower, it's a dangerous. We remain in a downtrend. There is no question about it. We still have a series of lower lows, but I think it remains a dangerous proposition to be on the short side because we get another leg of risk off. You can easily see these markets produce 500 pips of upside within 24 hours, easily. So, I don't think you want to be on the wrong side of that type of a move in this type of a market, right? That's what I think. If central banks keep saying they want inflation, why are they trying to suppress yields? Because they're lying. They don't want inflation. They believe that inflation is going to come. And when inflation comes, since they can't do anything without making the markets implode, they want to be able to keep the pretense for some time that it was planned to have more inflation, so they don't actually have to react to it because they got their wish fulfilled. In all actuality, inflation is what they fear the most. They know that part of the inflation is being hidden by the flawed method of statistically measuring it, but they know that that won't even be enough to hide all of it once it really explodes to the upside. So at least they want to have already formed the pretense that that's not something to worry about because it was all along part of the plan. Trust me, it isn't. Because the type of market they've built, once they actually have to make a choice, if they want to fight inflation or not, the actual choice is going to be if they want to prick the bubbles, because there is both a bond bubble and a stock bubble, and one requires the other. One would not exist without the existence of the other. Because don't forget that bonds and stocks are substitutes in essence as financial products, right? There is the so-called opportunity cost. I mean, there is a different opportunity cost of not owning stocks if you get, let's take the good old days, if you get from a decent portfolio of bonds, let's say a 10% yield, and a different opportunity cost if what you get from a decent portfolio of bonds is a 1.5% yield, right? In one case, you are a lot more prone to risk it by going to stocks, no matter the fact that they're overvalued, than in the other case, right? So one bubble requires the other. So once there is only one way to fight inflation, raising rates, but the bond bubble is based on zero rates and quantitative easing. How do you fight inflation? You stop or even reverse quantitative easing by going to quantitative tightening and increasing rates. That immediately pricks the bond bubble, that immediately pricks the stock bubble. And suddenly you have an anyhow extremely sick economy that's in the being kept alive by being plugged into the machines and keeping the pretense that everything is okay. Now suddenly you take it off the plug, and it's going to end up where it has to end up. Any type of economy that runs 10% deficits, real deficits, 10, 12% real deficits, and has an explosive trade deficit and an explosive trajectory of its debt is a sick economy. And the markets don't depict that because they're artificially pushed to do what they're doing. So once you try to fight inflation and you take that artificial support away, suddenly the markets will have to price in, for the first time after many, many, many years, economic reality. And economic reality is very, very ugly. Very ugly. Not only for the US, I would say the US is probably one of the worst of the developed countries having to do with economic reality. At least the trajectory to oblivion is the fastest. But once this is revealed, the markets will have to price it in. And once the market have to price that in, there is going to be a bloodbath. So trust me, the Fed or any central bank does not want inflation. They say they do, but they don't, because they'll have to make choices that will be extremely hard and politically devastating, because as you understand, whoever is in charge is going to be blamed. Of course, the state of, let's say, the US economy, the US is not the exception, as I said, it's one of the many, is not the fault of Bush Jr., is not the fault of Obama, is not the fault of Trump. It's a cumulative fault. Every administration during the past many decades has been increasing the problem, has been increasing government spending, and at the same time has not increased revenue, has been decreasing the actual productivity of the economy, has been pushing the economy, all developed economies have been pushed to a model that is actually dysfunctional. It's not a real economic model. There is no real economic model that is based on consumption. Consumption of what? In order for somebody to consume, you need to produce. How can you overconsume more than what you produce? You can do it in the short term. You can do it in the medium term. You can do it even for several decades if you're lucky enough to have the world's reserve currency, but you can't do it forever. The only real wealth is production, right? So when you have an economic model that's based on 70% consumption, that's something that cannot work long term. And at some point, somebody's going to have to face that reality. But as always, everybody's throwing the ball to the next administration, hoping, actually it's a grenade, it's not a ball, hoping that the grenade is just going to stay is not going to explode in their hands, and then it's somebody else's problem. The problem is this type of grenade. At the same time, it like becomes bigger by the year. So it's at the beginning it's like it's a small grenade. At the end, it's like an artillery cell. So the longer we perpetuate the inevitable facing of economic reality and building economies in the developed world that actually can prosper, the bigger the problems we'll have to face when we can't anymore pretend that everything is all right. Anyhow, okay, that's it for today. So see you all tomorrow. Bye bye.